Hi there, traders. This is Brad Gilbert with today's trading action. All right, now this is a pretty big day because we've got the Bank of Japan interest rate decision. Is it going to be 0.1? Is it going to be no change? And there's even speculation of a possible 0.25%. Now, just to get bearings on the markets, some of the home price numbers that were coming through yesterday, the home prices slightly weaker. The Case-Shiller numbers here also weaker, right? So a little bit of weakness in the US dollar. So if I can just come back to the majors, okay, you can see the dollar index is drifting a little bit lower. If anything, Euro's still sort of drifting lower, but stabilized, as has sterling, and the Aussie now drifting sideways, and as is the Kiwi. Now, dollar CAD, I tell you what, this is going to be a good trade when this trend line breaks. But at the moment, oil is still falling and pushing dollar CAD up, right? The commodity currencies, the CAD, Aussie, and Kiwi getting pummeled on the back of that like sort of Chinese growth situation and the weakening economy. Now, dollar yen, let me just clear the screen. We had that initial move down on the sort of speculation that it was going to be 0.1%. Then the market stabilized, right? Drifted sideways. And it's been up and down through the cloud, up and down through the trend lines here. So you've seen a squeeze to the top side. Now the squeeze back down to the downside. This is going to be pretty wild, right, around the whole release because there's so much speculation around what they're going to do. I'll come to that in a second. Dollar Swiss sort of drifting sideways, but I still like it down. And that's where we are, right? On the bigger picture, right? If you look at the daily charts, you know, dollar index mid-range, as is euro. Sterling's drifting back down here towards that support trend line now. But we do have the Bank of England interest rate decision tomorrow, right? So that's going to come into play there. But most of these majors are on hold waiting for the Bank of Japan to see what the hell they're going to do. I don't think there's any need for them to be, you know, going outside the scope of what they need to do, right? 0.25%, right? If you have a look at the news articles here, right? Yen gains and reports a possible 0.25%. I don't think so, right? Knife edge Bank of England decision. It is, but it's also for the Bank of Japan as well, right? And there's talk about bond tapering. There's a whole range of things Japan can do, but they don't want to mess it up, right? This seems like a bit of a rush to come in. We've got weak US fundamentals, so they come in and whack it. Doesn't make sense. Bank of Japan, okay, 0.1% chance of a hike, 55%, no change, 45%. That's where the money is, right? So it's going to move either way. If there's no change, okay, dollar's going to spike topside. If there is a change, the dollar's going to get hit to the downside. And that's the same for the yen crosses. Hike, right? The yen crosses fall, no change. Then all those yen crosses sort of jack right up again. So, but there's a few other things coming out before that, right? And there's a couple of sort of leading things here. Aussie CPI numbers, right? Very important for what the RBA is doing. Now, they've been on a, you know, we're going to possibly hike scenario. That's rubbish, but they're going to stay on hold for this for some time. And the interest rate sort of probabilities there says they're on hold till well over early next year. But that could change very quickly with weak numbers. Also, with the manufacturing numbers out of China, if these numbers continue to tumble, it's going to put pressure on the whole Australian economy, China being their biggest export market. And that can be that sort of external factor that really discombobulates the central bank interest rate forward guidance, I should say. Now, also retail sales, retail trade, well, that's coming out at the same time, but CPI and those Chinese numbers will dominate. Don't forget, there's two numbers there, right? I'll be covering that in the live trading session today. And then you come down through the start of the European session. We've got some German employment numbers. Rarely do you see a shift there. Some CPI flash numbers there out of the Eurozone. Well, it's worth having a look at. But, and this is where you scroll down and you're trying to work out where's the BOJ. Well, it is here on the date, but the situation is there's no set time like all the central banks. They all have a set time for the release of the decision, statement, press conference, blah, 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 right? There's a procedure. It's always been like this for the Bank of Japan. They do not have a set time. You'll find traders in all the banks across Australasia will be sitting there for hours waiting for these guys to come out and give us the secret gravy, right? My bet is 0.1. I just can't see it'd be too disruptive to the Japanese economy. politically and sort of fundamentally to go 0.25 after not changing for forever, right? So, but as I said, a change will generate a move because it's a line ball decision here. So that means if 55% have factored in a hike, 45% have got to go and change their positions, and vice versa. If there's no change, 55% have to unwind or get long dollar yen, right? So this is going to be hugely dramatic for the yen and the yen crosses. So just be careful, right? Like the liquidity around these events is like crazy, right? So if you're looking for opportunities on the yen crosses, try and work out which one has got, really a good setup. And since we're in the Japanese session, you've got to consider the Ichimoku cloud at most, right? Throw in some trend lines there as well. But you can see the move has already sort of started to be slightly factored in, that the hike is in play. So that means if there's no hike, which I don't think they can turn around now, I think it's going to be 0.1. But if there was no hike, excuse me, you're going to see some wild price action as these things jack up to the top side, right? But if they do hike and if they did something extremely weird by 0.25, well, it's going to drop very aggressively, right? It'll be a swift move to the downside and then a ricochet back up. I think it will be looked upon as being good, obviously for interest rates, but negative for Japan overall, and that's going to put them back to where they are. And that's the main reason why I don't think the Bank of Japan goes today. All right, so plenty going on. Have a look at your Aussie and Aussie crosses. There's a fair bit in play here. That whole Chinese deterioration of the Chinese economy is putting huge pressure on the commodity currencies, as I said. So you've got to factor that in. So with the dollar, you know what? The US dollar is almost neutral at this point, right? Just at the moment. And this is where we will be looking very closely at the Bank of Japan, obviously. It's going to determine where everything goes because the yen crosses are against, they're all quoted the same way. So if they hike, Aussie yen, Kiwi yen, all the yen crosses fall. And if they don't change, they all go mental. After this, the markets will stabilize and we'll be in a position to have a crack at the Bank of England, see what they're going to do with their interest rates. And just having a quick sort of preview of the Bank of England, you've got the cut, okay, close to 60%, right? Another line ball decision. So we've got a lot of line ball decisions here, and the next month they all go into cut, right? So this is where it gets a little bit mental. But the Bank of Japan, for me as a trader for 35 years, this is really sport, right? Because we've been waiting for these guys to do something forever, right? And now's their chance to shine. I got to think 0.1% is the move. They may come out with some crazy stuff on bond tapering. You've got to sit back and let that come out because they're going to talk. It needs to be interpreted. They have to understand what they're doing with their bonds, et cetera, and so forth. So there's no lay down thing. They hike by 0.1, and do we see a clean move on the yen crosses? Well, it depends what they do with their press conference, their bond tapering. Like there's too many sort of variables, right? You want an easy trade, but to me, this is more something to watch. Go in with a small trade, but just be aware, liquidity, it's going to be jumping around. The big surprise would be 0.25. That will really push, well, the yen up, and all those yen crosses will get sort of massacred to the downside. If I just show you the dailies here, right, this is where the surprise move would be. And you know what? How would I get into that trade? Well, you're probably looking to get into like 50 points below the market to try and avoid the initial volatility. It's a big, bold thing to do, go by 0.25, but maybe factor it in, right? Anyway, it's all set up. The market's factored in a hike. Let's see how it plays out. Huge day. All right, guys, have a good one. All the best. Cheerio.